So the best way is, I could explain some steps, but I'm gonna throw maybe a typical case file that somebody is facing regarding their tax problem. So the case study, we're gonna have a client named Joe. His name is Joe Case. And he has not filed 4 years of taxes. So in this case, we're gonna have a client, he's gonna call up and say, you know what, I got a tax problem, I owe about $30,000 to the IRS. I have not filed in the last 4 years. So this is actually the steps that we would go ahead and do with Joe. The first step is, you gotta be in tax filing compliance, absolutely. The IRS will not allow you to go with any other steps unless you're in tax filing compliance. So he's in the red because now, you know, he has balances due with the IRS and he's not filed. So number one is, we're gonna now start getting them into the good graces of the IRS. So the first thing we're gonna do is, we're gonna file all back taxes. That's maybe the very first thing we could do. File him all up. Now that he's all filed up, it's gonna go ahead and open up the green lamp to go on to the very next step. However, there's a caveat with filing all the tax returns. If he has $30,000 that he owes the IRS, he cannot have any new additional balances owed to them. If he does, then he has to do one major thing, and this is also part of step one. He has to fix his withholdings. Or if he's self-employed, he has to make estimated payments. And this is something that we help our clients with. We absolutely help our clients with this stuff. You cannot be owing the IRS additional balances. You cannot be owing the IRS additional balances once your problem is all fixed up. That's why he cannot have. So imagine the $30,000. What could be possible is when we get them all filed up, sometimes it's possible if this happens when somebody's self-employed, we have new balances owed. So you would want to stop that. So when somebody has estimated payments that they're paying as self-employed, or they're fixed the withholdings, in the future, they don't have tax problems. When they file next year, next April, they're going to file on time, no new additional taxes, because you got to stop the bleeding. You cannot continue the pattern of filing and owing, especially for a process of going through tax relief with the IRS. So, at the same time, with a brand new client, what we're going to go ahead and do is we're going to make contact with the IRS, the initial contact, and we're going to get certain records. The records have the breakdown of the balance. And a major step, something called the CSED. So what's the CSED? The CSED is basically when you owe the IRS only has 10 years to collect the moment you do owe the money. So if he for this $30,000, let's say he owes $10,000 for 3 different years. Let's call it tax year 2014, 15, and 16. If he filed those taxes on time, each of those years would fall off after 10 years that he did file. So it's whatever taxes you do owe each specific year has its own collection statute and expiration date, or the 10 years when the whole thing will expire. So we call that CSED. It's the term, collection statute expiration date, the CSED. So each balance has its own CSED, and the IRS will definitely provide the CSED to us whenever the balances would expire. What exactly happens as of that date? As of that date, if the IRS did not collect the money, the IRS will write off the balance down to zero, and you will not owe that money. But sometimes if it's fresh balances, it always is, the 10 year starts the moment you file, the moment that debt is processed. That's when the 10 year starts. That's when the 10 year clicks. So once we have these type of record, we have step 1 is to get everything all filed up. Step 2 is we make contact, we get the records and stuff like that from the IRS. And then step 3 is we're going to do a financial analysis. This basically, we're calculating the relief. We're going to see what is the best program that you're going to qualify for based upon your income and your expenses. We're going to put everything together now. Now that you're all filed up, we have the payment broken down by the balances that you do owe, and together with the financial analysis, we're basically calculating what is the best tax relief program that you're going to qualify for. And the step 4 is we're going to go ahead and choose the best program based upon the financial analysis, based upon the CSEDs, and now that you're all filed up. Now, after the financial analysis, step 4 is we evaluate the program. And by the program, meaning that the most popular one is the offer and compromise doubt as to collectability, where you offer the IRS a certain amount. For example, let's say that, back to Joe case, name of the case study. If we filed the 4 years, there's no new additional taxes, and he owed 30 grand. If we calculated on our financial analysis, he has about $500 worth of equity in an asset or something like that. He has some kind of stocks, bonds, and he has nothing else, no disposable income, only $500. That's the calculation we did. By all means, we would say offering compromise is a pretty good route, that we would go ahead and submit a $500 offer to the IRS. When you do that, we normally like to engineer it where you do 20% down as deposit, and then the rest, 20% of the $500 is $100. So you submit $100 with the offering compromise. In addition to that, they require an application fee of $205, and it's 2 different checks to the IRS. The whole packet, then they get submitted. That's the offering compromise. And if it gets accepted, that means the $29,500 left of the original balance would be forgiven by the IRS. That's right. That's why the offering compromise program, it sounds like a really great program. However, you must qualify for that. Your certain income, assets, it must all match up. And at the same time, the whole 10-year key from item number 2 with the CSEDs, I would say they would have to be quite a ways away for the offering compromise to make sense. Because let's say it's quite an older year, and the CSED date for a particular balance, it's right around the corner. It might be within a year and a half. And if it's that close that somebody owes a balance, then the offering compromise would not make any sense because it's a lengthy program. The chances of rejection are still there, so there's always that threat. And so then you might want to choose an alternative program. Any alternative programs would work, such as a non-collectible status or something else known as a hardship payment plan. Those are 2 very great programs, and they're alternative to the offering compromise program. And that's where we evaluate. So once we do choose the program, it brings us down to the 5th step. So step number 5 is to submit the tax relief with the IRS. You would want to submit the tax relief program. The moment you submit is the moment you're protected from any collection action. The collection action that the IRS can go against you, they could garnish your wages, up to 25%. If you're self-employed, the levy shows the full amount you do owe, and if you're 1099 commission, they could take up to 100% of that, and whoever is paying you just pays the IRS that. So it's very, very scary. Bank accounts too. The bank account garnishment shows $30,000. So if you have anything less than that, they take up to the 30 grand. So if you only have $3,000 or $4,000 in your bank account, they swoop it all up. So that's why a very important step is to submit for the tax relief. If you submit for the tax relief, then you're protected as of this stage. So the moment you submit, it brings it down to probably step number 6. And you just got to keep following up. The IRS is powered, it's man-powered, and when I mean man-powered, meaning that they make mistakes, it's human-powered. So if somebody's out sick, somebody, they're working from home, bad internet connection, whatever the case may be, you don't want your case to be lost in the sauce. You want to definitely keep following up until there's a decision made. Once a decision is made, then you have qualified for relief. And part of this follow-up, believe it or not, is when there is something that doesn't go your way and it does get rejected, like offers in compromise, you might have a second chance in one where you could request appeal. You have appeal rights on something that's rejected. This includes installment agreements, non-collectible status, offers in compromise. You have the right to be heard by an independent office of the IRS when something gets rejected. We do a big portion of our work here through the Office of Appeals because of something that got rejected. And because that something got rejected, we definitely need to fight back the IRS. And there are times where we are much more successful through the Office of Appeals because we have an independent office that isn't strung out on just, getting you out the way. The Office of Appeals would want to hear you out, review all evidence submitted, and take an independent approach as far as what additional substantiation could be submitted on your case for your case to be accepted. So that's how we handle maybe the typical case. When somebody has a tax problem, we're going to review, first of all, the tax debt. We're going to review the tax debt somebody has. In this case, it was Joe's case. He owed $30,000, has not filed in 4 years. The very first step is all back taxes were filed up. The second part is he had to fix his withholdings, make sure that he doesn't owe for future years and he starts filing on time in the future. This prevents him falling down this whole rabbit hole again. The third step is we, as his power of attorney, we get the records. We get a balanced breakdown year by year, and also what's known as the collection statute expiration date, which is the 10-year rule where the whole thing will be written off by the IRS. Third thing is we do a financial analysis. Basically, it's a calculation. We calculate what is the best tax relief program Joe is going to qualify for. The fourth is we're going to evaluate the financial analysis compared to the CSET balances from step 2. So step 4 basically combines steps 2 and 3 to review offer and compromise, financial hardship payment plan. Step 5 is we submit. And then the last step, once we submit, we follow up. And that's how that's your basic, when somebody has back tax filings needed, has a balance due with the IRS. This is it in a nutshell of how we handle this type of case. Yeah, so we, if you have any questions, you could check the link in the description. We do offer free case review if you're having problems with the IRS, if you're going through an audit with the IRS, correspondence audit by mail. Even if you're not local to us, we're located in Orange County, California, and if you're not local, we can still help you out. Everything's done virtually. Even if you have a local collector, a local auditor in whatever state you're from, we could still deal with them. At the worst case scenario, we could get your case transferred over locally, but if not, we normally handle cases with the IRS, even though the IRS is not next to us. The IRS operates by fax anyway. That's their modus operandus. Anyway, thank you for watching, and Appreciate the support. We got a whole lot more content on tax relief. Thanks for watching.